Hello and welcome to this new blog post where we will have a look at the European Union and what the European Union is doing in regards to sustainability. In this post I would like to focus on two different elements. The first one is the European Action Plan on financing sustainable growth. And the second element is the Sustainable Finance Framework. So let's have a look at the European Action Plan first. So what is the European Action Plan on financing sustainable growth? Well, it's part of the framework of what is called the European Green Deal. The European Green Deal is a concept or framework that wants to eliminate all net emissions of greenhouse gases by 2050. The second important aim is it wants to decouple economic growth from resource usage. And then the last point here is that nobody should be left behind, meaning that it should be fair, that no group of a society should benefit more than another one. And of course, the European Action Plan is a strategy paper that sets out a strategy for sustainable finance. So let's have a look. What are the aims of this action plan? And I listed you the aims here. There are three major ones. The first one is to reorient capital flows into sustainable investments. Then the second one focuses on sustainability and risk management. And finally, we have the idea or concept of transparency and long-termism. And each of these aims has different actions defined. So let's have a look at the actions. So for the first one, we have 5 different actions. The first one is probably the most important one, or the one that you might have heard of. It's about the EU taxonomy, which is a classification system for sustainable activities. The other actions also go in this direction. So what they want to do is create standards and label for green finance products. The European Union also wants to foster investments in sustainable projects. It wants to incorporate sustainability in financial advice. So if you go to your financial institute, have some money to invest and discuss about this investment, then your financial advisor must fulfill certain criteria and has to have a kind of protocol or guidelines where he has to mention something about sustainability. And then, of course, Action 5 wants to establish benchmarks for comparisons. The next element that deals with risk management is more related to, I would say, financial market participants. So the actions that you see here, integration in rating systems and market research, clarify asset manager and institutional investors that they have to talk about sustainability and incorporate it in their policies and in their daily actions, and including it in prudential requirements for banks and insurance companies. That's more for, I would call it, financial market participants, but it's not the main focus that I have. What is more important for me are these actions number 9 and 10, because they have a very close IT relationship that we will see later on. So action 9 focuses on disclosure. And if you read this action plan, then behind are European Union Sustainable Accounting Standards. So the European Union created their accounting standards, especially for sustainability. And then we have a corporate sustainability strategy that focuses on corporate governance and different measures. Okay, so if we have a look at the European Green Deal and say the European Green Deal sets the framework of all of this, then we have the action plan in the middle, and then here the 10 different actions. And if you look from left to the right, where we start with households, then institutional investors and asset managers, banks, then we end up here with companies, and their disclosure requirements. And all of that should go into the directions of the three aims, to reorient capital flows, to incorporate sustainability in their risk management, and then foster the transparency. Here's another graphic, also from one of the documents of the European Union, that starts with investors, then institutions that collect capital for investments in, for example, corporations, in order to have a healthy planet. Now, if you are an IT guy like me, then you might wonder, hey, why should I bother all about this European Action Plan stuff? Well, some of this is what I already mentioned. The first element, this EU taxonomy, has a high relevance for IT systems. Also, the EU sustainability accounting standards, they will have an impact on your IT systems. And then these corporate governance regulations, they might also impact your systems and applications. If you want to read more about this, I have here a couple of references for you. Now let's have a look at the second element of this presentation, which is the Sustainable Finance Framework. What is that? Here's a graphic from the European Union that highlights the main pillars. If we start in the upper left-hand corner, you will see a Corporate Sustainability Reporting Directive, CSRD. This mainly applies to companies and tells them what they have to report on. Then we have on the right-hand side the Sustainable Finance Disclosure Regulation, which affects more the finance industry, banks, insurance companies, and so on. And then we have the taxonomy that brings these both worlds together and makes sure that the key performance indicators, statistics, and all the data that need to be reported are in line with each other. What I want to do next is dig a bit deeper into these three pillars. The first one, the Corporate Sustainability Reporting Directive, is a proposal. So it's not finished yet, but it is likely that it will be published very soon. And I will give you an outline of the timelines very soon. But what is this CSRD doing? Well, it changes an older regulation. The older regulation is called NFRD, Non-Financial Reporting Directive. Why do we need changes to this NFRD? First thing is this NFRD basically already requires from companies to report on non-financial issues. So on environmental things, on things that affect people and society. It applies to large public interest companies with more than 500 employees. So currently from this NFRD, around 11,600 companies have to report according to that. But in 2019, the European Union published some guidelines, especially on this NFRD. Why? Because they noticed every company is doing it differently. This reporting, these non-financial reportings, they are not really comparable, and they want to improve it. But short note, this NFRD is already incorporated into local legislation. So for example, in Germany, large German companies that fulfill these criteria have already to report non-financial information in their financial statements. But because of this critique, because of these inconsistencies, the European Commission said, hey, we are not happy with NFRD. We need something new, something better, something that gives less latitude for interpretation and is more precise so that we have a better comparison. And that's why they came up with this Corporate Sustainability Reporting Directive. Okay, so this new regulation affects all large companies and listed small and medium-sized enterprises. So now around 49,000 companies have to report according to that if they fulfill at least 2 of the 3 criteria. So they have more than 250 employees, more than 20 million total assets, and more than 40 million euro sales. And important thing, it also affects companies from outside of the European Union if they are listed on European stock markets. Exception are small and medium-sized enterprises, but don't forget that banks and larger companies that have to report on their supply chains might need sustainability information from small and medium-sized companies. So at the end of the day, also these small and medium-sized enterprises basically have a reporting requirement because they need to give it to their bank or their customers. Okay, what is inside of this CSRD regulation? Well, first, there is an advisory group. They call it EFRAG, European Financial Reporting Advisory Group. And this group is creating and developing European sustainability reporting standards. These standards, they are or should be aligned with existing ones, like the one from GRI, SASB, and so on. But they're still not exactly the same, otherwise you would not need separate European ones. An important change is that the sustainability report is no longer a separate report. It must be included in the management report. Okay, also the initiatives and these different regulations must be aligned, but what is more important is you do not only have to include it in the management report, but there's also an audit and assurance requirement. So your auditors have to check what you report in regards to sustainability. And this brings us back to IT. We have to report this in an electronic reporting format. Electronic reporting, that's what's needed for this. The timeline for CSRD is the first sustainability reporting standards will be issued and published end of October 2022, and then in the following year the next set of reporting standards. Why is that? Well, because there's so much time pressure and speed behind all of that the European Union wants to bring out and enforce these regulations as soon as possible. Then the second pillar that we had was the Sustainable Finance Disclosure Regulation. Well, the reason for this regulation here is that the CSRD, so what companies have to prepare and report, is not really suitable for financial advisors, for end investors, or for, let's call it, normal people that have to invest some money. It's too complicated, they don't understand it. Therefore, they need a special regulation. And the underlying idea of this is that sustainability factors of your investment, they can have an impact on something and can realize benefits that have an influence on the risk-return relationship. And because of that, the financial market participants, so your investment banks, your bank, your financial brokers, they have to provide you a detailed information how they tackle and deal with the sustainability issues, and how their investments make a good and positive impact on environment and society. Okay, the last pillar is the EU taxonomy. What is that? Well, it's a classification system to identify which economic activities can be deemed sustainable. Okay, and to identify this, the European Union, they did not put it all into one single document, but they created so-called delegated acts, which are documents that include all of these criteria that tell you, okay, is an activity sustainable or not? And whether an activity is sustainable or not depends on three things. Number one, there must be a substantial contribution to one of the 6 environmental objectives. I listed them here, yeah? So climate change mitigation, adaptation, protection of water and marine resources, transition to a circular economy, pollution prevention, and protection of healthy systems. So whatever you do in a company, yeah, to classify this activity as sustainable, it must have a significant positive effect on one of these 6. Yeah? At the same time, it should not do a significant harm on the other one. So let's say if you invest something, yeah, that has a positive impact on climate change adaptation, but at the same time has a negative effect on water and marine resources, then this activity is not sustainable because it has a negative effect on water and marine resources. And sustainable activity also has to comply with minimum social safeguards. We will have a look at this in a moment. So let's say one of your activities can be classified as sustainable. What a company has to do then, it has to take its turnover, its capex and its opex and calculate a relationship to the total sustainable versus non-sustainable fraction. Here's an example. So here are a couple of activities and then we have 2 filters. Filter 1 says your activity has to have a significant contribution to one of the 6 objectives. Filter 2 says whatever you do should not have a negative impact on one of the 6 targets. And the filter 3 says you should apply with these social safeguards, with these minimum regulations. If an activity fulfills all of these criteria, it's calculated or considered to be sustainable. And for this activity, you have to calculate ratios. So you have to calculate sales, capex and opex, and just take the sales of the sustainable activities to the total sales. Capex and opex is the same idea. Okay, so to which companies does this taxonomy apply? Well, it applies to all companies that fall under this NFRD. Just remember that's the directive that will be changed and adjusted by SSRD. Yeah? And these rules already start from July 2020. And here are the criteria again for CSRD. Also, what you have to remember is that this taxonomy is not a mandatory list for investors to invest in. Yeah? Investors can choose whatever they want to invest their money in. Yeah? The taxonomy is also not something that says if a transaction or activity is not a sustainable transaction in line with this economy, that it's not sustainable. Yeah? So whatever is not classified as sustainable in line with the EU taxonomy is not at the same time not sustainable. Why? Because a sustainable activity needs to make a substantial contribution to one of these targets. And what a substantial contribution is, that's specified in this taxonomy regulation. So it's clearly specified what can be classified as green or not. So if you change your refrigerator from an old one to a new one, you save energy, you contribute to all of these targets. But that's not a substantial contribution for a company that has 10,000 people. It is a small contribution, and therefore it's not something that is classified as sustainable in line with the taxonomy. It can be sustainable, of course, but not for this classification system. And some of you might have heard from this delegated act on nuclear and gas activities. There is a special document that was issued, and this was highly discussed in the media. I would give you a recommendation to have a look at these documents yourself. I have the references further below, and make your own picture, because I don't feel personally that this is that critical, or that the way how it's presented in the media is always fully correct. Please have a detailed look at these regulations and make your own opinion. Here are all of these rules and regulations, and most of them are in English language, but some are in German. Okay, so in summary, if we try to bring these things together, we had a look at SFRD, the Finance Disclosure Regulations, the Corporate Sustainability Reporting Directive. That's what we covered. We also covered the taxonomy. I will not cover this labeling and this eco-labeling, but here's something that is called corporate governance. Sustainable Corporate Governance Initiative. So what is that? And what is the relationship to the other things? Well, the European Union also has a Sustainable Corporate Governance Initiative. It's also a proposal that was issued mid of February. It requires from companies a due diligence to identify and prevent or mitigate things like that have a negative impact on human rights, on the environment. And you should do this not only for your own company, but also for your subsidiaries and for all companies in your value chains. And directors, corporate directors, have to oversee the implementation of this due diligence system and integrate it in their corporate strategy. So that's behind this corporate governance initiative. So the companies affected can be classified into a couple of groups. First, larger companies, approximately 9,400 with this criteria. Then we have smaller groups of companies in the European Union. For these smaller groups, the rules apply 2 years later. And then we have non-European companies, so companies from outside which have sales inside of the European Union and that fulfill either this or this criteria. Small and medium size enterprises are excluded from this. And here's some comments on that. So the next step for this corporate governance initiative is that the European Parliament and Council need to approve it. And then each country has 2 years to implement it into national law. But don't forget that some member countries already have such kind of regulations. For example, in Germany and France and other European countries, we have already such kind of regulations. Therefore, some adjustments or modifications of the already existing regulations can be expected. And then the other thing is there's some controversy about this corporate governance initiative. The Regulatory Scrutiny Board, RSB, has already rejected the proposal 2 times. And they require additional consultation, alignments, clarifications, and so on. And also inside of this directive, it says that this directive should avoid a duplication of reporting obligations. So it should not introduce new obligations to report something new. And that's something that needs further clarification. Again, here are some references. In summary, so what did we investigate? First, we had a look at CSRD, this Corporate Reporting Directive. It requires to report non-financial data practically for all companies. Then we have new European Union sustainability accounting standards, which are part of the management report. So it's no longer a separate report. We also have an audit requirement and we have an electronic reporting format requirement. On the right hand side, we see this financial directive that focuses on financial institutes, market participants, and so on. That's not the major focus of this blog post, but we also have to know it. And then the taxonomy, which brings these two worlds together, so to say, by classifying sales, capex, and opex. And then this social corporate governance initiative, I believe it will lead to an extension of this one here, and what the corporations have to report, and it will see some changes. But that's something we need to see. Okay, that's all for today. So thanks again for watching and listening. And as usual, if you have questions or comments, just send me an email or put it in the comments section. So thanks a lot again, and looking forward to seeing you in the next blog post then.